The rivalry between the United States and China is no longer quiet diplomacy or hidden negotiations. It is now a full-blown contest for power, taking place in front of the entire world. At the center of this struggle lies something far more important than trade. It's about who controls the future of technology, who dominates global finance, and who attracts the world's sharpest minds. Donald Trump once promised Americans that the United States would remain unbeatable, stronger in tech, untouchable in economics, and unrivaled in innovation. But instead of that promised dominance, what we are watching today is a slow reversal. America is facing cracks in its leadership, while China moves with precision, speed, and a long-term plan that Washington underestimated. One decision from Beijing made this crystal clear. Practically overnight, China banned Nvidia's chips, shutting the door on one of America's most profitable markets. That single move rattled Wall Street, wiping billions of dollars from U.S. companies within hours. And as investors scrambled, Huawei revealed a groundbreaking new system, linking thousands of its own chips together to form a massive supercomputer. It was a calculated display of strength. While American firms counted their losses, China was showing that it can innovate independently and build a technology ecosystem immune to Washington's restrictions. But semiconductors are only the beginning. The US dollar itself is under increasing pressure. China, alongside its partners, is steadily reducing reliance on American assets, shaking the confidence of global investors. Each step sends a message. Beijing knows how to use financial strategy as a weapon just as effectively as technology. Add to that Trump's strict visa policies, which are pushing scientists, engineers, and innovators out of the United States. Many of these brilliant minds are choosing China or other emerging economies as their new base. For America, this means losing talent, losing markets, and losing global trust. Washington still talks about victories, but the reality is different. Every move today is tilting tomorrow's balance of power, and the ground is slipping. Nowhere is this clearer than in the chip war. When China's internet regulator officially banned domestic companies from buying Nvidia's AI processors, including the coveted RTX Pro 6000D, it sent shockwaves through the tech world. Nvidia's stock immediately fell, and with China representing nearly 1/8 of its revenue, around $20 billion, the impact was undeniable. The ban wasn't just economic, it was strategic. Beijing's reasoning was simple. China will not allow its military, its industries, or its AI future to depend on chips designed and controlled in America. This is where Washington's miscalculation is exposed. For years, U.S. policymakers assumed that China's AI ambitions would always rely on Nvidia, and that sanctions would cripple companies like Huawei. Instead, those very sanctions handed Beijing the justification to act. The chip ban was framed as a patriotic necessity, energizing support at home while cutting U.S. companies out of a massive market. In one move, China flipped the script. The losses for America are staggering. Overnight, a market once worth $50 billion became inaccessible. And the timing was no accident. It happened just as trade talks were intensifying. The message was clear. China doesn't need to beg for a deal. It has leverage. Meanwhile, the U.S. belief that restricting chip exports could slow China's rise is proving to be an illusion. The truth is that Nvidia depends more on Chinese buyers than China depends on Nvidia's products. And this ban proves it. China has been preparing for this moment quietly for years. Billions have been invested in domestic chip making, new designs have been scaled, and entire supply chains have been rebuilt. The chips may not yet surpass Nvidia's most advanced models, but they are powerful enough to fuel China's projects in AI, robotics, defense, and advanced computing, and most importantly, they are beyond America's reach. What appears to be a sudden break is actually the result of long, careful planning. This is why Trump now finds himself boxed in. The trade war that was supposed to weaken Beijing has instead revealed America's dependence. While U.S. companies struggle to survive without access to China's massive market, Beijing is turning restrictions into opportunities. Huawei's latest announcement shows exactly how. Instead of slowing down after the ban, the company revealed a revolutionary new computing design, the Superport cluster. Imagine linking more than 15,000 AI chips so they operate as a single gigantic computing brain. Each processor talks to the others, creating a system that can scale endlessly. Thousands, tens of thousands, even millions of chips working together as one. It is a brilliant workaround that changes the terms of competition entirely. While Washington is stuck thinking in terms of chip-for-chip comparisons, China is inventing entirely new strategies to leap forward. So, where does this leave America? Losing market share, losing investor confidence, and losing the very talent that once kept it ahead. And where does it leave China? Stronger, more independent, and more determined to set the rules for the next technological era. This isn't just a trade dispute. It is the story of a shifting world order. And every new decision, every restriction, every ban is writing the script for who will dominate the future. Instead of chasing Nvidia's H100 in a direct showdown, Huawei chose a different battlefield. They realized that you don't always need the single fastest chip in the world, if you can link together huge numbers of slightly weaker processors and make them work as one. By mastering scale and coordination, Huawei built a new route that sanctions from the West were never designed to block. Even better, the economics played in their favor. Ascend chips produced in Shenzhen come at a fraction of the cost of Nvidia's hardware built in Taiwan or Arizona. What was meant to cripple Huawei ended up fueling its determination. Sanctions gave the company political support at home, financial backing to push deeper into research, and the urgency of survival. Forced into a corner, Huawei didn't collapse. It adapted, emerging with systems that aren't just competitive, but more resilient. The ripple effect spread across China's tech landscape. Giants like Alibaba and Baidu now have access to a reliable domestic chip supply, meaning they no longer live under the threat of sudden cutoffs from Washington. Freed from dependence, these companies can drive forward in AI, cloud computing, and robotics, all powered by components made inside China. What began as an attempt to strangle one company has ended up planting the foundations of China's entire technology ecosystem. Meanwhile, the United States is facing its own vulnerabilities. Beyond semiconductors, America's real backbone, the dollar, is under pressure. For decades, the dollar was the undisputed king of global finance. But international investors are hedging against it again. Some analysts warn that up to $1 trillion could be redirected into hedges, returning to levels not seen in 10 years. The cracks are already visible. Japanese investors saw the S&P 500 climb 13% this year, but after converting returns back into yen, their profit was cut to 6%. In Britain, it dropped to 4%. In Europe, it fell into the red, down 1%. Despite these risks, only 3% of foreign-held U.S. assets are hedged, leaving nearly $30 trillion exposed. If the dollar weakens beyond a key line, a flood of money could exit U.S. assets, triggering sell-offs, inflation, and serious doubts about America's financial stability. Now bring China back into the picture. If the yuan strengthens toward the 7.0 mark against the dollar, exporters could move as much as $300 billion back into local currency. They don't need dollars to cover costs. Why hold a weakening foreign reserve when they can shift into a stronger yuan? This is the next front in the conflict. China is not only competing in chips, it's positioning itself to chip away at the dollar's dominance. At the same time, Trump's policies are amplifying the problem. Heavy government spending, fractured alliances, and policies that rattle investors all combine to weaken America's position. And then comes the third blow: talent. Washington has imposed a staggering $100,000 annual fee on every H-1B visa. For companies like Google, Microsoft, Amazon, and Intel, that's devastating. These visas are how they bring in top engineers and researchers from around the world. 3/4 of these workers are from India, another 12% from China, and the rest from countries like Canada and South Korea. For employers, it means either swallowing millions in extra costs or cutting back on foreign hiring altogether. The result? A brain drain that increasingly flows toward China. Talented graduates who once dreamed of Silicon Valley now see opportunities in Shenzhen, Beijing, or Shanghai. Even U.S. universities feel the impact. Foreign students who once paid huge tuition fees with hopes of staying to work in America may no longer see it as worth the price. Leaked memos from Amazon, Microsoft, Google, and Goldman Sachs reveal the panic. Employees on H-1B visas were told not to travel abroad because re-entry might be blocked without paying the new fee. Families and workers alike are trapped in uncertainty. Overseas, the reaction is telling. Indian business leaders openly say the U.S. is no longer the automatic destination it once was. Silicon Valley isn't the dream anymore, it's just one option among many. The US government insists the new visa rules protect American jobs. But experts say the opposite. America doesn't produce enough engineers to meet demand. Cutting immigration doesn't protect jobs. It slows projects, hurts innovation, and risks sending cutting-edge research abroad. Both Wall Street and Silicon Valley know exactly what's at stake. The talent pipeline that gave America its edge is being diverted, and China is the biggest beneficiary. So here's the question. If America can't secure its technology, can't guarantee the strength of its currency, and can't attract the world's brightest minds, then what foundation is left for it to lead the world? Stay tuned, subscribe, and turn on notifications for more deep dives into the battles shaping our future.